Welcome back to the channel, everybody. I am Mick Alphanim. Let's jump right into this news. This article here is from the cryptobasic.com. We're going to start off with three powerful articles here. Very interesting. It's titled, New Rumor Suggests New Ripple versus SEC End Date. When I first heard this, I was thinking to myself, wait, we already heard June, then we already read December. What could be the new date? Let's read this little tidbit here. It says, the lawsuit between the United States Securities and Exchange Commission and Ripple has continued to be an important topic of discussion in the XRP community. Community members are anticipating the final verdict of the case, which is expected to come before the end of the year. And that's what I've been reading, and that's what I'm hoping for. It says, since no one knows the exact date Judge Annalisa Torres will issue her verdict, the community must rely on predictions and rumors from legal experts. Well, yeah, I wouldn't say it's rumors, but it's speculation based on experts who have gone over Judge Torres's record. Like, for instance, the May date, that was based on a certain precedent that was set. June, same thing. And December, I don't remember what that was based on, but the December date came from Ripple itself. So, I mean, if you're going to take anybody's word on it, I mean, people are going to go with that. That's the most solid thing that they have to grasp onto. But let's continue on here. It says, will the lawsuit end in 2024? Listen, I continue to see this 2024 date pop up. You got MiCA legislation rolling out in 2024. You have a lot of different projects that companies are putting together that probably are going to roll out in 2024. It almost seems like they want everything to coincide in 2024. I have an article here somewhere. You have this new project by Goldman Sachs and a couple other big companies that probably is going to roll out. It's Microsoft, Goldman Sachs, and Deloitte. That is going to be tested this year, but it's probably going to roll out in 2024, full blast in 2024. I mean, there is a lot going on possibly in 2024. So I keep that in mind, but let's continue on here. It says, there is ongoing speculation in the XRP community about the potential end date of the SEC versus Ripple lawsuit. Prominent XRP influencer Mr. Huber revealed that Judge Torres may issue the much anticipated summary judgment after her summer vacation in 2024. I don't know why it would stretch out that long. I just don't see the logic, but let's continue on. Maybe there's some evidence of some sort. It says, he also noted that the unidentified source, this is more unidentified. So it's a leaker, possibly a leaker. Or it could be nothing, who knows? It says, he also noted that the unidentified source revealed that both the SEC and Ripple officials have met twice. However, Mr. Huber did not disclose the rationale behind the meeting, especially whether the officials met to discuss the terms of a possible settlement. So, and then it goes into another settlement rumor here and a few other things. Once again, if you want to check this out, it's on the cryptobasic.com. They have a lot of other information on this here. But, it's just hard to rely on things from unconfirmed sources. I'd rather just, listen, I'm in here until it happens. So it doesn't matter how long it takes. I'm staying. I'm not going to be shaken. They're not going to squeeze me out. They're not going to break me. Everything goes off. So now let's move on here. Here's another article. It's from the Bitcoinist.com. And it's titled, Already 13 African countries utilize Ripple and XRP. Let's read this little tidbit here, see what they're talking about. It says the African Blockchain Report 2022 report by the CVVC in collaboration with South Africa's Standard Bank reveals that Ripple and XRP are already utilized in 13 African countries. Well, they got to clarify. Let's see if they clarify a little bit on this. Do they mean infrastructure is set up, or do they mean that they're actually sending XRP back and forth already? Because, I need clarification on that. They have to be very specific. But let's continue on. It says, in the report, which was released in late April 2023, but has gone unnoticed in the XRP community, an entire page is dedicated to the technology of Ripple. According to the report, the opportunities for digital payment services providers like Ripple in Africa are overwhelming. While the region has already made significant progress in recent years, much of the potential is still untapped, it says. Of course, they haven't begun to tokenize all of those commodities, and that's why Ripple's there, Stellar's there, Hedera. There is a lot of value that will be issued on chain that definitely can make a huge impact. All right. But I mean, I'm excited just hearing about that. 13 African countries. My word. So let's continue on here. It says by 2025 alone, electronic payments revenue is expected to grow 20% to $40 billion. Remember what I said last time. They always lowball you. They always give you the lower number. They never give you the high number. And then another thing I forgot to mention in the video from yesterday about when they give you that low number, they absolutely do not want FOMO. They don't want people piling in trying to get bank coins at all. You know, it's always that way with something that's very valuable. They keep it very low profile. All the elite people and rich people, or wealthy people, really, a lot of people out here are rich, but a lot of wealthy people get in. And then later on, they let everyone else pick up the scraps until everything is launched and all the real money is made. They keep it quiet. So now let's continue on here. It says, however, there are still gaps in the continent's financial system that leave countless people unbanked and many African businesses. Crypto is also the solution due to the high penetration of cell phones. Yet less than 10% of total payments in Africa are currently made digitally. According to the report authors, blockchain and crypto-enabled remittances can save an average of 6.3%, and in sub-Saharan Africa, 8.46% in fees compared to traditional methods. It says Ripple already well positioned in Africa. We read this little tidbit and then we'll leave this off here. And if you want to read the rest of this, it's on, once again, it's on the front page of bitcoinist.com. It says the report effectively provides a pitch for Ripple and its XRP-based on-demand liquidity solution. It also unveils a map of the countries in which the company is already active: Benin, Burkina Faso, Egypt, Ghana, Kenya, Mali, Nigeria, Senegal, South Africa, Togo, and Uganda. So very, very powerful positioning if you understand the dynamics of what will be happening in Africa over the next 5 to 10 years. And they're moving at a lightning pace. Okay, so now let's move on to another article here. So this one here is from U.Today and it's titled, Ex-Ripple Director Urges El Salvador to Switch to XRP. There's a lot of activity happening. It seems like everything's speeding up very, very quickly. In my humble opinion, I'm looking at 2024, right? I think a lot can happen in 2024. I really do. And I think that Europe moving as fast as they did, well, you know, with the MiCA legislation, they were moving quickly because Europe is in a very, very precarious position, a very, very desperate position. If you see what has been happening there, occurring there geopolitically, all right? So they had to move quickly. But by them doing that, they put themselves in a very powerful position. So the rest of the world is starting to feel the pressure when they already were trying to move rapidly. The UAE is moving rapidly. I mean, they are the dominant ones as far as welcoming crypto in. The UAE looks like they're going to be the global hub as of right now. Then you have Hong Kong right behind them. So everyone's in this rapid race and they're moving pretty much faster than I anticipated, to be quite honest. But we'll see. Once again, I'm looking at 2024. The pressure is on. All right, so now let's read this little tidbit here. It says, in recent days, the Bitcoin network has experienced a surge in demand, fueled by the growing popularity of BRC20 tokens, inscriptions, and ordinals, commonly known as NFTs. This has resulted in a boost in revenue for miners as the average commission paid per block reached its peak. However, the surge in demand has also led to higher fees for Bitcoin users. We've heard this. I also read that a lot of people are just going over to the Lightning Network, things like that. So I don't know how much of a solution that is, but I've read that people are going over to that as a solution. It says, as journalist Mars Romero recently observed during a cash withdrawal in El Salvador, one individual was charged $20 in fees, wow, for withdrawing $100. A significant cost. Oh, I see what's going on here. Okay. A significant cost in a country where the average salary is $300 to $350. This has prompted Romero to caution against enabling gambling on non-fungible tokens or meme coins. emphasizing the real-world impact of high fees on users. In response to Romero's tweet, Matt Hamilton, former director of developer relations at Ripple, suggested using technology that is better suited for that purpose. Now, wait a minute. Keep in mind, Algorand is there. I don't know if Algorand's reaching out saying the same thing, but Algorand is there. Their Bitcoin runs across Algorand-based infrastructure. So I keep that in mind as well. So that's always an alternative. You can use Algo outright down there, but that would be up to Algorand, Inc. or Algorand Foundation to reach out. Ripple is reaching out. It says here, using technology that is better suited for the purpose, such as XRP and the XRP ledger. He argues that getting upset about the limitations of Bitcoin and its widespread use does not help anyone. All right, so Ripple's trying to slip in there and take over where Bitcoin is currently ruling. This will be an interesting dynamic to see if more of this occurs. A lot of people have speculated that a lot of systems will be swapped out. I usually speculated that when it comes to CBDCs, MBDC systems, when you upgrade, you'll have layered systems and such like that. But a lot of people were saying that when it comes to Bitcoin and XRP, right? We'll see how this works out, but this is very interesting. Now let's move on here to another article. All right, I hope everybody out there is doing well. Hope you had a good day, a successful day. Now, this is a little bit of Stellar related news. Now, we've been covering extensively everything that's happening with Franklin Templeton, but what we need to look at also is this is where they're beginning with their relationship with Franklin Templeton. Now, if that goes successfully, as much as Franklin Templeton's head has, the head of the company has praised and drooled over the Stellar blockchain, it would lead me to believe that if everything continues to go successfully after a period of time, that operations or the utilization of Stellar XLM could be expanded. Okay, XLM is integral to everything that they do for the wallets, transaction fees, etc. Right, and liquidity if ever that is needed. A lot of these different assets will be rendered illiquid. There'll be a lot of problems in the future, especially for anything that is dollar based. Right, the liquidity is derived from the dollar, the diminishing of the dollar by the world, dollar dumping. BRICS nation activity, things like that, things that you have to watch out for. Then that liquidity that XLM can gather from around the world could definitely come in handy. I'm not saying it's guaranteed, but I do expect their use of Stellar to expand if everything continues to go successfully. This is a page from Franklin Templeton Institutional.com, ftinstitutional.com, and it's titled Our Clients. It gives us an idea of where this could go, where this could expand to. Okay. Now, it says here, defined benefit plans. We've been helping pension plans meet their goals for more than 40 years. So pension plans are on the table. All right. Defined contributions. It says we take an interactive consultative approach to helping plan sponsors achieve their optimal plan design and improve outcomes for their participants. Endowments and foundations. So we can expand there. There's, then they have healthcare systems also. So that can be on the table as well. We already know blockchains are beginning to dominate when it comes to the idea of artificial intelligence and blockchain working together, like the new technologies that can lead to a better healthcare system. Algorand in particular is dominating right now in the healthcare system. I don't see why Stellar also couldn't get a piece of that. And they could probably do that through Franklin Templeton. So it says healthcare systems, hospitals and healthcare organizations have complex investment needs. So that could be on the table. All right. Insurance and sub-advisory. You have that. Insurance, general accounts. We can help with all of this. Right, especially given the pretty good capabilities of the smart contracts on Stellar. Investment consultants, find the right investments for your clients from our full global range of strategies plan, spanning markets and assets. Look, when it comes to security, moving capital back and forth, especially if we ever get regulatory clarity and we can start moving some of the value of some of those more traditional offerings. Sure, I mean, we could be used in that way as well. So I'm keeping my eye on this. It's the same way and the same thinking that I approach with banks, where if banks use Stellar or they use Ripple or Algorand, I immediately begin to look at their partners, their subsidiaries. And I say to myself, well, if this goes successful here, then it could definitely expand. All right. Now, there's no guarantees in that, but that's typically how business goes. Businesses like to set up things that are, very akin to networks, loose-based networks. They're not official networks, but they're sort of like webs and networks. Okay, so that's typically how they like to do, to keep it on one system and keep everything flowing, right? So that's something I'm going to keep in mind. I'm going to keep my eye on this, and hopefully we'll get some updates. Of course, it's going to take some time. Let them use this initial use case for Stellar, and we'll continue to monitor and see how it goes. All right, so now let's move on to another little article here. Now, this is more Algorand based information here. It's from financemagnates.com. This article is titled "Leveraging Blockchain Technology, Revolutionizing the Healthcare Industry." Listen, Algorand, and they have like three offerings that were trying to get in deep, building Algorand infrastructures for the healthcare industry. The one that I follow the most, you already know, is MaPay or MaPay. You go ahead and check them out on Twitter or their website. But anytime I see blockchain in healthcare, Algorand immediately pops in my mind. Let's read this little tidbit here. It says, blockchain technology has become a disruptive force in a number of industries, and the healthcare sector is no different. Blockchain technology has the potential to transform healthcare by bringing safe, decentralized platforms that will enhance patient privacy, manage data better, streamline procedures. The use of blockchain technology in the healthcare sector is examined in this article, along with substantial advantages it provides. In the healthcare industry, where sensitive patient information is shared, data security and privacy are crucial. Immutability and encryption, two built-in security properties of blockchain, provide strong defense against data breaches and illegal access. Blockchain makes guarantee. It says makes guarantee. I don't know if they wrote that correctly. Blockchain makes guarantee that patient records are secure and impenetrable by decentralizing data storage and applying cryptographic techniques. Furthermore, blockchain gives patients more control over their data. That's going to be key and important. By enabling them to agree to data sharing while preserving their identity and privacy. So now let's get into a very, very crucial aspect of this, why I believe Algorand is going to continue to dominate, and any other blockchain that chooses to get into healthcare. As we just discussed, Stellar has the opportunity, if they expand their uses, with Franklin Templeton, who brings healthcare clients to the table. All right. But that's something we can look at a little bit later if things continue to go well there. It says here, the lack of interoperability. Now, not just in the medical industry. This is across all industries. They lack interoperability, which is one reason why. I look at the bank coins and their use cases in a multidimensional way, the possibilities in a very multidimensional way, because there's lack of interoperability everywhere, not just in the financial system. And we can bring that everywhere, not just to the financial system, which means we can scrape up money from a great deal of different places, right? Which is a great thing, which is what we want. Now, let's read this a little bit here. It says the lack of interoperability across various systems and databases is among the biggest problems in healthcare. A standardized platform for data exchange and interoperability is provided by blockchain technology. Smart contracts make it possible for healthcare providers to share patient data easily while preserving data integrity and minimizing errors brought on by human data entry. This interoperability enhances care coordination, promotes medical research, and empowers healthcare workers to make better decisions. Now, one thing I'll also add is the combination of this and artificial intelligence will be extremely powerful in the healthcare system. All right. That's personally how I feel. And I have a lot of information on the healthcare industry. Trust me on this. So this is what I'm keeping my eye on. And I think Algorand is going to do very well in the future because of things like this. You know, as well as their domination in every other possible way. Real estate, that's going to be powerful as well. If you look at how it's very difficult to move like commercial real estate right now, especially with work from home. But the fractionalization of something like that in the future, regulatory clarity, you can fractionalize that particular property. Now you got like 100 people, 50 people, 20 people, who knows? All of them buying a piece of it. It makes it much more easy for people to want to participate in purchasing, you know, investing in the market. So to speak. All right, so now let's move on to this next article here. Another bit of Algorand related news. And I'll tell you why. This is from beingcrypto.com. And it's titled, Web3 is the future of gaming. How to ensure safe adoption. Well, Look, obviously, Algorand has been absolutely dominating when it comes to Web3 gaming, but I'll throw another bank coin in there that's doing extremely well when it comes to Web3 gaming. Hedera. Hedera is also right there. And correct me if I'm wrong, I'm not sure. Just going by just utility coins, I think Zilliqa also has a few things. You know, I'm not sure if it was just their metaverse. I think I remember some projects they were doing with gaming as well, but don't quote me on that. But I know Hedera is in deep and Algorand is in deep. Let's read this little tidbit here. It says, gaming has come a long way since the early days of console and PC gaming. With the advent of new technologies such as blockchain and decentralized systems, we are witnessing a revolution in the field. Web3 gaming. Web3 is the next evolution of the internet, more decentralized, open, and transparent than Web2. With Web3 gaming, players can own their in-game assets. They can trade them also. So a lot of those big top gamers, after they win a crazy, incredible, first place victory in a tournament, they can sell whatever they were wearing. That's going to sell for big money. That's going to flip for big money. You have athletes, sometimes athletes join these streamers, what do they call it, videos, and they play with these streamers, and that's a special event. Millions of people tune in, right? They can sell whatever they were wearing as an NFT. That's going to be huge. That's good capital flow. And especially gaming is consistent. Streamers are consistent. Tournaments are consistent. So if some of that capital starts moving across Algorand or Hedera, that's pretty good capital. I would love to scrape up those millions all that are just laying on the table right now. This is going to be a great opportunity, but of game ecosystems and earn real world value for their gameplay. That's another thing. So I think it's only going to increase these games where you play it and they actually pay you. They pay you. They pay you to play. I would think that only increases. It doesn't have to be much, but getting something rather than nothing, right? I think people will probably take their time to check something out like that. It says here, first and foremost, the benefit of Web3 gaming is ownership. Traditionally, gamers don't own the assets they collect and use in game. Yeah, you're just buying a bunch of skins and they're just useless after you get them. It's just to look cool. Well, and with Web3, you can purchase something, use it, and you can resell it. Or you can sell it as an NFT, or you can create your clothing and sell it, create your NFTs and wear them and then sell them. I mean, there's so many different ways you can access, generate capital with this. It just looks very interesting. And Algorand is the deepest as of yet. So as of now, sorry about that. So now let's move on to this next article here. Private equity tokens aim to bring greater liquidity, transparency, and accessibility. It says, despite a few reservations, tokenization stands to streamline the way retail and institutional investors can access the private equity market. As the burgeoning blockchain technology paradigm has continued to evolve, a whole host of unique asset classes have started to make their way into the mainstream. Private equity tokens are one such offering, serving as digital representations of ownership in private equity investments powered by a decentralized ledger. These tokens enable fractional ownership. I was just talking about that when it comes to commercial real estate, right? Fractionalized ownership is the way of the future. Then we covered an article where there was a house and it was like maybe 10 or 12 people own pieces of the house. Pieces of the house. But hey, that doesn't sound like much because you're going to break that money down. It's fractionalized. But just imagine somebody owns thousands, hundreds of thousands or something. People have a lot of money to play with. Just imagine that. And then that capital just coming in every, week, month? I don't know, day? With this technology, you probably could access that capital immediately, right? Correct? So anyway, it's going to be major. It says improved liquidity and simplified management of private equity assets. They are, and then another thing, you don't have to really go through intermediaries when you're using most of these technologies. Well, it really depends on which company is offering it, right? Because now we're starting to have the advent of legacy system actors coming in and sort of layering legacy system methods, which includes intermediaries and fees, by the way, on top of blockchain technology. But if people use the regular utility coins outright, then there's no intermediaries most of the time. So recent research indicates the private equity and hedge fund assets are the most likely to see tokenization in the near future. The study surveyed fund managers in France, Spain, Germany, Switzerland, and United Kingdom, collectively responsible for around $546 billion in assets under management, and found that 73% of the participants identified private equity assets as the most likely first to see significant tokenization. Moreover, World Economic Forum has estimated that up to 10% of global GDP could be stored, 10% could be stored and transacted via distributed ledger technology by 2027. And who do you think is going to move that? Who's going to be the last one standing after all these regulations? Even Hong Kong is saying, hey, we're going to tighten up real tight on you. We're going to let you play, but we're going to tighten up these regulations on you. Who's going to be left standing? It's going to be the utility coins, bank coins at the top, in my humble opinion. It says with crypto asset custodian Finoa reporting that tokenized markets may be worth as much as $24 trillion, more trillions, $24 trillion. We continue to talk about trillions. These are long plays. This is the reason that they're long plays. The capital that they can access. There's plenty of short and quick money plays. I think one of the problems is maybe people are they're using money that could be detrimental if they lose it. So they don't really have that time to invest in something long term. But these are long-term investments, you know. So then that because you need to access that capital, you become a little bit impatient. I think that's a lot of what goes on. But when you're talking trillions every single time, you're talking about certain assets, and the bank coins are definitely in here. Obviously, they're all about tokenization, obviously. And they're in bed with some of the biggest companies, even governments. Some of this capital theoretically will flow across those bank coins. $24 trillion by the same year. 2027 isn't that far away, right? And they're talking trillions. Some companies in tokenization by 2020, was it 2025? I think it's by 2025. I think that was like Citi and some other, we read so many different time speculations. You know, it's hard for me to remember all of them, but I think it was by 2025. But either way, that time span is not bad for long-term investments. And to bring in trillions, that would do wonders for the price if indeed everything goes according to plan. All right, so now let's move on to another article here. I think we're making a good pace today. So we're getting through a lot of good information that I want to get to you. Now, this article here is from Axios.com, and it's about commercial real estate and the Fed. OK, I've been talking about commercial real estate, and it's titled Why the Federal Reserve is Watching Commercial Real Estate. They're watching it the same reason that I am. It affects the banks. It affects the economy. And the banks and economy, their lack of good health affects the rapid rise of the new financial system because they're going to need it. Now, well, let me just read this little tidbit, okay? It says here, trouble. I've been telling you commercial real estate is in trouble, haven't I? Trouble in commercial real estate sector, including office buildings across the country that stand largely unoccupied. A lot of that is thanks to working from home. Like almost everybody wants to work from home now. So buildings are going to be empty. Then companies are going to sell those buildings, or they're not going to want to purchase more office space because they have no use for it. So then how do you move that space? How do you move that value? How do you capitalize on that, right? So anyway, it says, including office buildings across the country that stand largely unoccupied, is a possible risk to the U.S. financial system, according to the Federal Reserve's latest financial stability report released on Monday. We've been talking about this for 2 months now. I told you. Haven't I been saying it? People better watch that commercial real estate. Holy smokes, that's a heck of a foot to drop. This is why it matters. Huge shift in where white-collar staff decides to work is rippling through the commercial real estate market, with warnings that sharp drops in property valuations will follow as office space demand slumps. Bullet point: that could spell trouble for the already battered financial sector, with uncertainty about the ultimate effect on the economy. What they're saying, quote, the magnitude of a correction in property values could be sizable and therefore lead to credit losses in an already tight environment. It says, for holders of commercial real estate debt, officials write in the quote financial stability report. Next bullet point. The Fed also said that the sharp jump in borrowing costs over the past year increases the risk that commercial mortgage borrowers won't be able to refinance their loans as they come due. The intrigue, it says, worries about the sector prompted officials to more closely monitor the performance of commercial real estate loans. A disclosure made public in the report, which, unlike the last report, features a special section of commercial real estate related risks. Bullet point: It says the Fed's bank supervisors, those charged with day-to-day oversight of lenders, also have, quote, expanded examination procedures for banks with significant exposure to commercial real estate. Details, and then we'll leave off here. And if you want to read the rest of this, they have a lot of information here. It's on the front page of Axios.com, AXIOS.com. Okay. It says details. Mortgages for non-farm, non-residential commercial real estate, which includes offices, are a small slice of total assets held by banks. Small banks and medium, they're in trouble. It says, according to the Fed, but those mortgages represent 1/5 of total assets for the smallest banks. I just said it. They're in trouble. We've been talking about this for a while, though, so you already know. With some of those firms, of course, having more exposure than others. But the Fed also acknowledges something of a blind spot on assessing the health of the market. Banks hold roughly 60% of these loans. 60%. It was all good just a week ago. Remember that? There was a song with that lyric. But there's limited information on how the loans held by other entities are performing. The report said, okay, we're going to leave off there. Once again, Axios.com. So we're going to end off with this little bit of bank stock news, okay? And it's titled, this is from investors.com, and it's titled, Bank Stocks Fall Farther. Equity Manipulation Threat Rises. Banks are in trouble. big trouble. This is why a lot of people don't trust them anymore, moving their money out of the banks and into gold, silver. And some people are holding cash. They're holding cash. Some people have diversified their cash holdings as well. Their paper tender holdings also. Some people got a few dollars, in the safe. Some people got a little bit of euro in the safe and a few other things that might, make them a little bit of profit, hold their value. But mostly to hold their value. So people are diversifying right now to protect their value. That's what it's all about right now. Look, we're going to go through a rough patch for quite some time, in my humble opinion. We'll see how it goes, and hopefully it doesn't come to that, but I think we're already in a rough time already. It says here, bank stocks pair early losses, equity manipulation threat rises. Bank stocks were mixed Tuesday after a handful were poised for early losses as regulators and investors digest the latest bank lending data. Meanwhile, calls for a ban on short sales continue to grow as the financial sector wobbles. Bank lending confidence surveys. Lending conditions tightened in April, and the latest data from the Senior Loan Officer Opinion Survey showed Monday afternoon that continued a trend from late 2022. Demand for loans also fell, suggesting banks were bracing for a downturn, while at the same time seeing less business come through the door. Trouble. The industry, trouble for them, good for us. The new financial system can take over. All we need is a victory in that case, a little bit of regulatory clarity. That's all we need. And it would provide us with that. And we would run wild. I think they know that. That's why they're dragging everything out. And we can dominate here. They are losing. They're weak right now. So anyway, it says here, the industry reported business loan standards tightened, making credit harder to get. But we know that. Janet Yellen told us that. That's why they were saying they may be able to not raise interest rates again, because the banks were tightening lending so much, right? So we already know that. It says, and demand for commercial and industrial loans to firms of all sizes weakened during the first quarter. Well, of course, there's a lot of different economic problems going on in the United States. Workers, getting workers through the door. People want to work from home, quiet quitting. I mean, there's so many things going on, right? It says the same was true, tighter standards and weaker demand for all commercial real estate loans. That's what I was just talking about. On the residential real estate side, household borrowing standards tightened across all categories, except for government-sponsored enterprise eligible and government residential mortgages. Both GSE and government residential mortgage standards were basically unchanged. Demand for all residential loan categories also weakened. Bank respondents also reported higher standards and weaker demand for home equity lines of credit, HELOCs. It says consumer loan category standards tightened. A demand for auto and other consumer loans also fell. Of course, if you know what's going on, if you see, listen, I know it's unbelievable to me. There's so many of these like legacy system news media members. They write. I read a lot of articles. I don't really watch. I don't watch television almost at all, and I'm barely on like the like the video sites, like even like YouTube and TikTok and such, as just once in a while. But I read a lot of articles, and in those articles, some of these legacy system news media, they make it seem like nothing's going on. Everything is fine. I know to you and I, that's unbelievable, but they make it seem like that. But we know from reality, being out there in the world, and some people live in pretty good areas, and you see the struggle happening, don't you? Let's tell the truth. We see certain people. So I think from top to bottom, people are going through a hard time right now is what I'm saying. So anyway, they don't want the people to know that, but it says bank responded. Okay. Consumer loan category standards tighten. So yeah, and demand for auto and other consumer loans fell. Yeah, people can't, they're just not going to be, wasting capital, wasting credit like they used to. They just can't afford to do it. It says while credit demand remained unchanged. Data for, that's questionable. I like to see that data. I would love to see that data. Data from the May IBD TIPP poll shows Americans are losing confidence in banks. Yes, we covered a few articles like that. Despite assurances from regulators and officials that the worst of the banking panic is over. You see that? We have top-notch economists after top-notch economists. We've covered their articles on this channel. You've seen them. You've had a chance to screenshot those things, look it up for yourself, right? Top economists from everywhere are saying that the worst is yet to come. And yet you have these individuals here saying that the worst of the banking panic is over. Something is wrong here, folks. Something is rotten in Denmark, folks. So according to the latest survey, 57% of respondents are confident in the banking and financial industry as of May, down from 61% in April. Okay, we're going to stop there. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the Monday.